Welcome to TradeTheMBI.com. This is John. This report is for the 5th of December. Well, a little bit of that softness we see actually was the NASDAQ that we noticed had significantly weaker readings than the S&P, and this was all up to bulls to push through. Right around the time new fund money coming in, but we continue to move right back towards this 45.45 uh, previous algo level that has been kind of a confluence, particularly over the last, going all the way back into June. And this fluctuation back and forth on it has just been a result that just hasn't been enough shorts to drive anything and not enough real positivity to really make a move, even despite Powell's softer comments. But, he talks hawkish there with the, tightening at the same time providing unprecedented liquidity. Yeah, it doesn't make any sense. And they're grappling with it. And that's what the market's trying to figure out, because if the Fed doesn't know where things are going to go with this, particularly as these deficits and that it's just spiraling out of control. There's no end to it. We look at our DOC readings, though, and you still sign under red. So all things being equal, it's likely that supports are going to hold within that. This push up, though, up to 9 now for the NBI. Once we see across the red NBI right here, that could actually start to begin to make some significance, particularly if NBI Magenta here drops below 25. That would be the turnaround point. But even from a shakeout, always be watching there that gold's still rising. So the trend is still intact, even though it's just in pause mode at this particular stage. And I wouldn't call that much of a move. Well, my gold chart here popping up. Got rid of it that way. From an NQ standpoint, you can see the difference much more dramatic. That NBI white has already crossed, and the pullover of the magenta, we already had DOC spread. And so that's where you're seeing the significant move. But is it really? Because at the end of the day, you're just back to the 76%, which is what we talked about, which corresponds to positive extreme, even lower than that at the 15.5 range. This still needs to get filled. So much to do about nothing? Yeah, pretty much right in line with what our expectations are. All right, we get this miniaturized gold chart here. Let's get it to the right size. When we look at gold, you can see beautiful move, spiking up, making the new highs, but then even further, only to have that retraced. Now, don't be fooled. That's going to continue within the paper market. There's a lot more fluctuation. You're going to see less of that when it comes to the cryptos. So, one half dozen the other. It's one of those long-term plays. It's not like it returns a dividend or anything. It's just one of those where you're expecting, catastrophic move in currencies, and that I don't see that at a particular time. I know that you hear this nonstop that the dollar's dying, blah 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 blah, but really, no. Still predominantly used less than it was. So yes, they lost some uh, power simply through policy error, but still predominantly used. And when we look at the Treasury situation, there's a big float back and forth here from a rates, and the bond market has just been um, kind of missing the boat throughout all of this, that we've talked about, which is unusual because normally they get it right, particularly ahead of recessions, things like that. But then again, how long have people been predicting this recession that hasn't come? Uh, you know, when you're spending as much money as they are to keep things afloat, there's no surprise we haven't seen it. Now, you could argue that for middle and lower class, they've already been in a recession. Absolutely. Their purchasing power has been wiped out, and it doesn't matter whether you have a job or not. If you can't pay your bills, you can't pay your bills. From an oil standpoint, despite the turmoils that we're seeing, still continuing to erode. Now, this begins to get set up another question of if demand erosion is related to economic growth, that's a much more serious consequence. And so, if we see continuation of supply tighten and prices drop through excess, that's a pretty good indication of a significant slowdown in economic activity. Um, Not there yet, but it's interesting to see it. So it's something that we continue to watch. I think that you would know that if it dropped into the 50 range. I think that would be a clear sign, particularly lower 60s with what we've already been seeing from economic readings. It's an interesting one. The fake pump in the euro, they can only hold it for so long, and yes, pulling back because again, just nothing in the eurozone of anything to talk about. It's just a disaster. The outside move of Bitcoin, and of course, cryptos, I don't think that that's unusual. They're going to move more simply because of the supply restriction. But again, this always gets back to the ETF situation and whether or not, uh, inflation is going to continue to ramp up, which with oil where it's at, I think it's going to be much more modest. It's still going to be above Fed target, but the Fed target is not for real anyway, so it doesn't really matter that much. Interesting that ETH has been a little bit behind. Again, took a while to catch up the first time and a little bit behind again, but, filling back the positive extremes, that's healthy from that standpoint. So no complaints with that one. And from a 50K, the long setup, we could see it was starting to fade. The white MBI started to take the lead. Got us down to the 23% instead of a full move to the zero. We got a full reset DOC with the orange dip there. Didn't last long. Big spike of the MBI white, and that's usually pretty critical, particularly when it's under the 50%. Usually calls for a move to the zero. That it hasn't happened yet, not bad. We get that turnaround here from the MBI magenta back above 25. Could see a move right back up to that 50% move, but any continued softness in there, I was expecting a move to the 0% from those readings. It's just not a whole lot of early activity at this particular stage. So we'll see how that plays out. Oh, let's go to the 5K. We get the 5K tick up. So it was interesting because when we look at the amount of volume we had, this is all before the open took place. So European market, some huge activity before we even got into the regular open, which, comes all the way over to here. And you can see that was just a move back up from the dip, kind of fluctuated back and forth, but then by the end of the day started to retrace just a little bit to fill in. Well, all of this move was positive extreme. So it's going from right about here, which is what we retraced to. And pretty much that's exactly where we find ourselves right at this particular stage in the post-market. So interesting stuff, but beautiful nonetheless, capturing those readings spot on there. As always, though, anything relevant I will put on the Skype chat, but certainly we're going to be paying a lot more attention to some of these upcoming readings. Let's see if we can sift through the government BS on them, but things are going to start getting interesting, it seems, and I think that's going to ramp up the volatility as well. So that's the play for now. As always, trade well. We'll talk again later.